Lowe's is solidly higher here on these numbers, $2.14, $2.15 adjusted versus estimates of $2.01 on better than expected revenue as well, a little bit. Anyway, the revenue was 20.9 expected, and the company did 20.94 to 20.99. And then for adjusted earnings for the year, the forecast is 545 to 565, and the estimate is 558. So that brackets that. C's full year comp sales up 3% after posting, I think, 2 or 2.3. 2.3 was the same store sales number in the most recent second quarter. Total sales up 2%, and they expect that to get better. And all those numbers, Brian Nagel, senior analyst who was here yesterday, don't adjust your TV sets. That's the same guy. You were talking Home Depot yesterday. A lot of similar things here. The comp sales are about a percentage point below Home Depot's, right? And actually the outlook about, I think Home Depot did 3 and was indicating 4 for the year. This is 2.3 and indicating 3 for the year. So comp stores sales aren't quite as good, but the overall number, I thought you said yesterday Home Depot was taking market share. I mean, this is pretty good here. It seems like both home retailers or home improvement retailers are doing pretty well, no?
Well, yeah, the one thing, and again, I'm reading this very quickly, but it seems as though, as I'm thinking about, we always compare Lowe's to Home Depot and vice versa. The Lowe's U.S. comp 3.2, that's actually a tenth of a percentage point better than what Home Depot did. So, and again,
what are they going up against from a year ago? Right. Comps are also.
I don't have all that in front of me.
Your quarter company. One thing I will say is Marvin Ellison is making some pretty positive comments, like we heard from Home Depot yesterday. He says, despite lumber deflation and difficult weather, we're pleased that we delivered positive comp store sales in 15 geographic regions of the United States. This is a reflection of a solid macroeconomic backdrop and continued momentum executing on their retail fundamentals.
See anything about lumber anywhere? I mean,
lumber prices, you said, despite lumber prices. Despite that, they're still seeing a strong economy, and it happened in all 15 geographic regions. So that if you're looking for any signals as to what this means for the economy, again, consumer looks good, and this is another home retailer that's doing very well.
I totally agree with that, Becky. I mean, this is, it very much is another positive data point for the U.S. consumer. But I wanted to say one comment on Lowe's. We've all been waiting now, and I've talked a lot about this on the show. Big turnaround potential at Lowe's. Lowe's has lagged for years. Looking at this report quickly, looking at the last couple of reports, it seems as under the guidance of Marvin, the new CEO, Lowe's is really getting its act together. And frankly, if we're right here and this continues, the stock has a long ways to run.
So is this a better buy than Home Depot just because of the valuation and what you see as the turnaround potential?
I think so. Look, when I say the dream scenario, right? If I model this out, I think there's more than $10 in earnings per share at Lowe's. If you put an 18 multiple on that, it's a $180 stock. Now, I know that's very simple math. I've got a $135 price target, but there's the key here with versus Home Depot and Lowe's. Lowe's has been undermanaged for a long time. Operating margins at least 5 percentage points below those of Home Depot. There's a lot of slack in this business model.
What about the geographic location of the stores? Isn't that another hit against them? They don't have the same distribution. Isn't that why they're underowned? I always thought it was executional skills were weaker, but also if you want full geography, you got to go Depot.
I think that's a piece of it. So I've done a lot of work around this, and I agree with you. It's very true that Home Depot's got, generally speaking, better locations. But going back to that 5 percentage point comment I made, I think that's maybe 2 points of that. The other 3 is simple, not simple, but store-level execution.
So I got to own both going forward. I can't get enough exposure anymore. I have to have the executional upside of a Lowe's now. Just as institutional investors always underowned this thing. Right. Is this the turning point?
I think so. Look, the way I'm recommending, you own them both. Home Depot, very high-quality company, undervalued stock, even with yesterday's bounce. Lowe's, turnaround opportunity. So it's really two different type of investment vehicles. But I don't think you'd be hurt owning both of them here.